Hello everybody, welcome to Equity Story. Just as I start the video, Wolf just put some food in his mouth. Listen, I'm not stopping the video just because you're picking out here, Wolf. We're a professional organization. In future, could you have your breakfast before? What are you ever going to do if you're on TV? You can't do this. You've got to eat your food before. Oh, just absolutely useless. I've been trying to train you now for 5 years, and you still don't know when to eat your food. Absolute embarrassment of unprofessional.
Thank you for talking, because give me time to eat my food. Thank you.
Thank God I've got a professional in today. So I've got Izzy, who often is obviously running the sales, but Izzy's a lot more than that. He's a registered advisor in shares. He's actually got a big history. We're lucky to have him. You can't see it now, but that's not his real office. His real office, he has his mum running around. He loves working from home, bringing him tea and cakes and biscuits all day long. What a life you lead, little Iz. Big Iz. And so anyway.
Life of a broker, Dave. Life of a broker.
So we thought we'd live it up today. We got Izzy. Izzy's as a guest, a star guest, very important, and he's in the video today, which is absolutely great. And before we start, Izzy, because we are professional, once Wolf's finished his food, we're just going to say this is just a general share advice and not personal advice. And please read the disclaimer on the website. So we're going to go right to the stocks now. Yesterday, we talked about dividend stocks, like small growth dividend stocks. And, a lot of, it's really important, and this is why it's great to have Izzy today, that, Izzy's much more available to, obviously, he talks to a lot of you all the time. But it's really when we talk to Izzy, and Izzy's saying, Dave, the guys want dividend stocks, the guys want this, that we get this great feedback. And so, this is why, and thanks to Izzy a little bit, we're working really hard to bring these dividend plays to you as well, right? And I think yesterday we came up with 10 small cap dividend plays, which average about 7.5% dividend with growth. Fantastic. We've got the large cap plays that Wolf's going to put out later once he's finished his food, and that averages about 7.7% gross. So, why are we trending, Wolf? This is in difficult times. Why don't we just all go to the beach and just take our 7.7% for the year and forget it? Isn't it?
I have no idea while we're trading. We should be doing.
Well, trading's hard in this environment.
I know.
So I'm in the sort of category of I think going to the beach and just relaxing for 6 months and just enjoying my dividend. But anyway. Let's talk about some of the stocks today. Now, Izzy, your Zip was a big story for us, and this was before you came. That Wolf picked this one at 60 cents. It actually 20 bagged, I think, for us. It went as high as 14.
Nice.
Wolf thought this was going to go to 20, and now it's down at 3.59.
Well, can I ask a question? Mm-hmm. With Zip, with Afterpay now coming off our market, it's not trading there anymore. If you notice today, does Zip now become the favorite? I know it's pulled back quite a lot since its heydays, but Afterpay is not trading anymore on the market. So what does that mean for Zip?
Okay, Wolf will answer that question because I think Afterpay is coming back as another company. But Wolf, what does that mean? Is that going to help Zip? Is Zip going to, now Afterpay is part of a massive American company? Does that mean if there is going to be any interest in the sector, eyes will focus on Z1P?
Well, like Dave, I think what Izzy's saying, I think it's probably going to become the flag bearer, right, of the buy now, pay later space. Not a great flag bearer, but just look at the share price. Look great. So it doesn't give you much confidence in this space. And of course, Afterpay now is going to be part of Block, who's going to be listing, I think, in a week or two. So look, the dynamics will probably change potentially over the next few weeks, where everyone's be looking to Zip to see how they're going, because the Block will integrate Afterpay into it, and maybe we won't see the numbers as clearly as we can see with Zip. And when you see today's numbers from Zip, they still look pretty good. The growth is definitely slowing, right? No doubt about that. But is it worth 360? Absolutely. I think it's probably worth much more than that. But for the moment, the market's just saying we're just not interested. And we just got to be patient to see if it does come back at some point. Now, look, that's probably the jury's still out whether they can actually make any money or not, because they're still a loss-making operation, and they might be for some time. But the growth at the top line is still there. So we'll see. It's still early days in a lot of the jurisdiction they've got. I think I saw UK today, still very small numbers. Rest of the world, still very small numbers. But the US and Australia still are doing okay.
Wolf, it's just amazing, isn't it? Something like Z1P, and just how the sentiment gets killed on a story, and this is why, dare I say it, the charts are so important, because they just pick up the sentiment and how people are running in these different sectors. But you know what? Fear not, Wolfie, because I think if you look at that 40, 50, 60, 70, 80, all these moving averages, they're coming down, right? So eventually, what's going to happen is that the charts are going to break above the trend line, right? And it's going to start looking good. And that could be around $4 in 6 months or 7 months from now. Then we're going to get in. So it'll give us a great time to get into the stories. I'm not too worried. Now, Whisper.
When does it report? When is their report supposed to come out?
I reported today.
Oh, okay. Very good.
Yeah, okay. So these stocks we're talking about have reported today, Izzy.
Got you.
Now, Whisper, hot stock, had a run up to $3. The profit taking came in. The announcement today, Wolf, how do you rate it?
Yeah, I think that's why there was a run on the share price from $2 to almost to $3, right? On the back, there's going to be a strong quarterly. It was now a bit of profit taking coming in. So, again, the sentiment at the moment in the tech space is difficult. However, the company delivered some good news today, and possibly you're going to have another nice little 12 months out of them. Whether they can sustain that run and keep going over $3, I think it's not dependent on Whisper. I think it's dependent on the sentiment in the tech space in the US. So we'll see. And Dave, when you showed me that NASDAQ chart today, I was a little bit scared.
Yeah, no, I think I don't want to show it to Izzy, because Izzy gets very worried about these sort of things and he gets all in a panic. But yes. What we've got is the NASDAQ, the first time, Izzy, since the COVID breaking trend. Now, don't panic yet, Izzy, right? Don't call mum in, right? Because what we're hoping for is by the end of the week, it has a little bit bounced back above the trend line, yeah? But it's not looking very good, right? If we break trend, it's not looking good. It's possible that this, and you know what? If you read all the rhetoric coming out of the States, they're talking about at least possibly another 10% on the markets there. So, but go on, bring it on. I want this little correction. I need it.
Can I just add? Whisper's report was actually quite phenomenal. I mean, if you read their individual result just on the headline note, annualized recurring revenue, 60 mil. It's up 26.6% on prior corresponding period. I don't know what analysts were targeting. I don't think they were targeting anything, to tell you the truth. They've got cash receipts for the quarter at 25.4 million. That's up 56.2% higher than quarter one in 2022. So they're looking at 124% increase on PCP, and gross new customers that they've acquired over the quarter has grown like 119%. So whatever they're doing it right. I think the market just hasn't responded on that note.
Yeah, and it's funny, isn't it? It's all about this sentiment, and I think that's what's hard for mums and dads, because mums and dads look at the market and they think, if a company's doing well, then that share price should go up. But it's so much about sentiment in sectors, and that's what makes the stock market such a hard place to make money. And
absolutely,
but if you've got I agree, if you've got a long-term point of view on WSP, hold on, and hopefully we're going to get some good broker upgrades on Whisper coming out tomorrow and Monday. That hopefully will at least drive that share price up a little bit higher.
That'll be really good.
Now we got EVS. What did you make of that, Wolf?
Yeah, look, a nice update from them. I think they're talking now ARR of getting close to 50 million. It's again a long-term story in a pretty good space, because they're looking at air quality control, water quality control, all these software to monitor all these environmental issues, right? Whether it's in the airlines industry, whether it's in the mining industry, it's all there, and they've got a huge market, I suppose, to play with this. So for me, I like the story a lot, and I think, you know, if again you take the long-term view, it looks like a winner potentially, as long as, of course, they can execute successfully. But other than that, nice update. Whether it's got enough momentum to keep going with this, one hopes so.
It'd be interesting to see where this one ends the week, Wolf. I mean, if it can sort of end the week around 24, it could have a buy signal, which maybe is a catalyst to have a little bit of a move next week.
Okay.
Yeah, nice stock, up 4.6% for the morning. So see how it goes.
NWL looking very sideways, Wolf. What did you make of the announcement?
3 out of 3 now. PPS, Hub, Netwealth, all coming up with very, very strong numbers. A lot of inflows coming to their platforms. Really, the only thing that's holding probably them back is they are expensive, right, on a relative PE basis. So might go sideways, but I would certainly, if I'm a holder, I would not be probably selling out. I'd still be holding on with a view that the next 12 months would still be pretty good.
All right, next cab off the rank, LPI. Now this is interesting, and Izzy, you're gonna find this really interesting. So it's obviously part of the lithium, and you see the stocks had this massive move up, and everyone's excited. Now it's down today. It's down 13%, and although the chart still looks bad, Wolf, you're saying earlier it's time to take a profit on this. So what's the issue we got here?
Look, there's two reasons why you probably want to take a profit. First of all, it's gone bloody hard, right?
Yeah.
And obviously the chances are it's going to probably have a bit of a pullback. The market was expecting some sort of announcement. It has come, and that is a feasibility study, right? So profit taking normally on an announcement could potentially happen, and it does happen here. The third thing for me, though, is if you look at the actual pre-feasibility study in there, while what they're projecting is pretty positive, the one that's not positive for me is the capex. Again, a company that needs almost $1 billion to develop a project, it's always going to probably find it difficult to develop their own project, because $1 billion just doesn't lie on the street where you can pick it up and go, okay, I can do it.
626 million US. That's phenomenal for a project.
Yeah. So if you analyze in Australian dollars, that's almost $1 billion.
So how would it do that with market caps only 247?
Well, you tell me, Dave.
It's the country. Firstly, you look at the country. What country are they in? It
Chile.
Might be an expensive country. Electricity is expensive. Freight's expensive. Labor's expensive. Could be a number of things. Like we look at one of our recommendations, Dave, like Pan Asia Metals, the ones that's been going quite well for us and the clients. That's in a very low cost environment like Thailand. For every 6 employees they employ in Thailand, we employ 1. So it really depends on what part of the globe they're in, how everything costs them. That's why the capex is going to be so high.
Yeah. So it's although it looks good on charts, like Izzy and Wolf are saying LPI would be taking a profit. Now, what a shame. So they're up 11%, little P&N Panini. Wolf, there's a little bit of resistance here at 69, so it doesn't quite trend for me. But what did you make of that announcement? They've got
look, I think to be honest, I'm not sure about the announcement. The only thing they're trying to focus on and projected to the investors out there is that the concentration of lithium is much higher than some of the other projects around. What does that actually mean? I'm not so sure, to be honest, Dave. I'm not a huge expert in the brine space, lithium. So I just think they're just trying to obviously say our project is better than everyone else's. Pretty much.
I can tell you a bit about that. Brine, when you look at lithium, you've got brine, which is the liquid form.
I know that.
Supposed to be supposed to be nice and easy to extract. If you have the right tactics and the right technology behind you, you can probably get a very high percentage out of it and the very low cost. And then you got your hard rock, which again, if you do it right, you can still do it under low cost. Which one's better? In this day and age for lithium, it doesn't matter. It's lithium. Lithium's
Do you know what the actual nice grades are of a brine deposit?
Sorry,
because I don't. I'm not sure, to be honest. So
it's all right. It's all right. We've actually got a proper analyst in now, Wolf. So Izzy knows. He knows all this. So
I'm
mate, it's all right. It's all right.
I know a little bit of a lot of things, just a little bit.
You just turned into a chartist. That's your problem, Wolf. You've forgotten your fundamentals. Thank God for Izzy.
But it's a great result. 5.2% lithium content achieved from evaporation test. That's actually quite high. In standard terms for lithium content, it's quite high. But again, it's just a percentage of something. It's not like they're saying we're producing 20,000 tons or something. So early stages. All
right, quiet now. Izzy, otherwise Wolf won't invite you back.
Sorry, mate.
Now, next one, CYG. Wolf, you had a look at these this company upgrades. You like them, don't you?
Look, the numbers are okay. You're, I think, talking about 15% growth today from the business. They didn't want to give any guidance, but that's okay. You look at the numbers and saying FY22 should be still positive in their space. And when you look at the chart and you're thinking, buy me.
Yeah, no, the chart does look good. So, I mean, it's had a little bit of run. I was going to put this on a trend, but, it's maybe a bit of resistance at 2. But for those, buying, for those sort of trenders out there, if you can get this, if it has a little bit of a dip later today, maybe back to that 180 or 180.
Maybe wait for tomorrow, Dave. Maybe.
Maybe we'll look at it tomorrow, Friday, where we feel a little bit more confident. But certainly, and there might be a bit of profit taking later this afternoon on it, but certainly possibly a trend in this story. Now, Wolf, drum roll, because I know you've been working really hard. You've been going through the dividend plays, and with the new website, once we get the dividend portfolios up, Wolf's going to be monitoring them. So we're not just going to leave them there. The idea with these dividend portfolios is hopefully we pick the right ones and we can leave them there. But obviously, if there is an issue, we'll change it and we'll move it around a little bit. But I'm going to go take it from the top, Wolf, and we're going to go through your dividend plays. Now, they're averaging 7.7%, which is excellent when you're getting 1% in the bank. And I think in some places in the world in Europe, you have to pay money to keep money in the bank. I mean, so why wouldn't you be in Wolf's high dividend portfolios? But okay, let's start with
pays more than a term deposit, Dave. So
yeah, no, definitely. So BHP, Wolf.
Mm-hmm.
Tell us why this one's in. Well, I can tell you why it's in.
The thing is, I probably don't need to speak about it too much. I mean, we know these stories, right? Maybe there's a couple I'll have to explain, but BHP, of course, we've talked about it. No brainer, Dave. Easy. What is it?
12.35% growth.
12.35%.
What was it paying when you put it on as a no-brainer? It must have been
about 40, I think it was.
50.
Yeah, I think it was too. Yeah, that was one.
14% was it down there?
No, $40.
$40.
Yeah, no, but what dividend would that have been there? That would have been about 15%.
It's a bit similar. I mean, it's not going to move that much.
Yeah. Okay. Next one off the list, Wolf, is SUL.
Yep.
Now they're gross 10.26%. Fantastic returns, these two stories. Unbelievable.
It is. And the other thing is what I need you to do for me, Dave, because remember, with dividends stories, you want to look at it longer term. So I actually want them to be seen on a monthly basis, if possible.
Okay, yeah, we will.
It's just much more comfortable where you don't have to panic every 5 minutes when there's a little bit of a volatile market.
Yeah.
So if you look at that, it's obviously quite good.
Look how stable it is. Look how stable. I know it's been up and down.
So if you can get your 10% per annum out of this and a little bit of growth, you're doing decent. I mean, people generally go for dividend stocks for income, right? More than anything else. So if they can get stable type dividends that they can count on every single year, then probably most of the job is done. So with SUL, you've got a company that's it's got a few different businesses under its brand, from BFC, I think, or BCF, I think. Sorry, not BFC, BCF, to Super Cheap Auto and so on. So decent. I know it's going to, at the moment, probably with the COVID situation, it's thrown it around like all the other retailers and so on. But we're going to go past COVID and say things will probably normalize towards the second half of the year. And hopefully they'll return to some sort of growth.
JB Hi-Fi is next off the list. Wolf, again,
Yep.
they just had a really good announcement recently, 8.36% growth, which is very, very strong. Let's have a look at the charts and you know, charting reasonably nicely. This one,
Yeah, I mean, another
take,
retailer, though, right?
yeah,
Another retailer, but it's an electronics stuff, so it's very different to SUL. So we're happy. You know, what we're backing here is the management more than anything else. And again, they've said, sorry, Analyst, you were all wrong again. We do our job well, and we've delivered again. So, you know, you can't really fault them for that. I know that there's a lot of detractors for JB Hi-Fi, but when you look at the performance over a long period of time, generally speaking, most periods they have really delivered.
Absolutely. I mean, all it takes is to walk into one of their shops, which is pretty much, they're all the same, but they're always full, and packed. That just says it all.
Now, SUN, I'm surprised you went for this, but I mean, look at the gross, 8.07% gross dividend. You don't normally like insurers, Wolf, and surely aren't you getting a bit concerned with all these tsunamis around? I mean, bad weather, doesn't that worry you a little bit? Why have you?
Didn't they sell all the insurance business?
Oh, did they? I thought they were just insurance, only with a little bank.
They used to be. But anyway, look, I'm looking at. I think it's more like a banking wealth type business these days, right?
I've never met anyone who.
Look, the banking space is all difficult anyway, financial, but it makes a huge part of our market.
Tell me, who banks with them? I've never met anyone who's banks with Suncorp.
I've met a couple of people. It's mainly businesses and so forth.
Yeah, exactly. It's more business oriented than anything else.
Up there in Queensland. But can I just ask, just on that note, since you're on Suncorp, maybe, I don't know, maybe it's more for Pete. Have you ever heard back in the day our regulators trying to push a fifth bank? And back in the day, they were trying to get one of these banks to merge, either Bendigo Bank or someone. Is that still happening? Is there some kind of push for Suncorp or someone to merge together to make that fifth arm?
No, I think that died down, especially when then you had all the royal commissions into the banking space. And I think that everything's just quietened down with that mergers things, because first of all, they need to sort themselves out first.
Yeah,
it's probably going to take number of years for that to go through. And I know, you're absolutely right, because I remember when there were those original banks, the Bank of Melbourne's, Adelaide Bank, and those all been bought out. And then the regulators go, what have we done? We've allowed all these to shrink down, and now we want to expand it again. We're a bunch of idiots. Exactly right. You are a bunch of idiots, right? So whether there's going to be another big banking force in the next 5 years, I'm not so sure. But the Bendigo banks have already merged with some of their smaller type regional things. So they are growing. Will it ever reach to another big four bank? Probably not. But at least, we've got the regional. So it's not too bad.
Well, okay. Wolf, how big a threat are these online banks for our big four or going forward? Is it a...
Oh, you mean the ex-ninjas of the world?
Yeah, I mean, I look at all my family in Europe. They're all with these online banks. I've never heard of them. It's like really weird sort of name.
I'll tell you what, Dave. For the millennials, absolutely, probably they love that sort of new stuff, online stuff. For the older generation, I'd say they'll be very skeptical of the new stuff, and they'll go with the names they trust, because you can see already we've seen some failures in that online banking space, right? So I'll be scared to go into a little online bank and thinking, my money's safe. So I think it'll take time before that's really takes off in a big way.
Yeah.
And by the time anyway, I think the banks will probably develop their own or buy some other like little ninja banks, and they'll probably be well prepared for it anyway.
All right. Next off the list is COF. Mm-hmm. So again, looking very strong off a monthly, and this is a 7.4% gross. We did actually look at this, Wolf, and I think it was giving around 12%, and we did mention it to a few people, and they're still holding it. But 7.4% gross, and I think they have a lot of government contracts, don't they? In a lot of government buildings. So great little business, and I understand why you've got that on.
Yeah, we're gonna have a big real estate play in there, right? We actually got two. I think we've got one there. Go on, Metcash.
You got Metcash. So, and what I'm seeing, which is really clever with this portfolio, is a big range of different type of sort of businesses in different sectors, which is fantastic, Wolf.
Yeah, well, we covered about 5 or 6, I think, different sectors, right? We're going to have two staple, and this is one of them, Metcash, and obviously delivered pretty well recently. So we not only got a great chart and a bit of growth here, we've got a nice dividend as well. So I think it ticks most boxes.
I think everyone seems to forget about the IGAs of the world.
They do.
It's under Metcash.
And you know, funny thing is, you know, when I saw some pictures, people were posting pictures on, you know, the social media and stuff, saying that shelves are empty due to the lack of staff and so on. You know, people were posting of IGAs and they were all full, saying,
it's the system. It's the system they run under. They have that. Right. Yeah, they've always been great when it comes to that. Yeah. Yes, it might be a little bit more expensive, but the quality is different.
Yeah. So look, I'm a big fan of IGAs of the world, so yeah. I'm okay with that.
Yeah, me too. I love it.
Okay, I can't add anything to that except I managed to get some Bovril from MTS, which I couldn't get anywhere, Wolf.
There you
go Metcash. They had Bovril. ANZ. So
yes.
Okay, of all the banks.
A bank, okay.
Why have you gone for ANZ?
It's probably the best looking charts, I'd say. Yeah, look, I could have gone for any banks. I mean, there was Westpac to go with, but that was looking pretty sick. So I'm thinking, okay, look, what's reported fairly well, and the market sort of said, we don't mind you, and they can potentially deliver on that over the next 12 months and pay a good dividend. And I think ANZ probably ticked most of the boxes here.
What's their divvy at? Is it 5%, 7, 8?
7.1.
Is that fully franked or?
That is grossed up and 100% franked.
Nice, very nice.
Now, Wolf, CQR got a little look in, and that's a little bit less, a 5.87% gross.
Yeah.
How come this one got in?
Well, probably two things: dividend, good-looking charts, and again, you know, we got a love affair with property. We got a love affair with office space. So why not? You know, we're gonna have to fill our portfolio with quality stories that really dominate the ASX, and this is one of them.
And next off the line, NEC, which is down a little bit. So possibly, if you look at that monthly, giving an opportunity around that 250 level, Wolf. Not a bad gross up div of 5.51%, plus a little bit of growth.
Yeah. Look, this is obviously something very different to what we've spoken about before. It's in the media space. So really what really attractive for me is, first of all, the dividend is nice. 5.5% is very, very, very nice. But it's actually got growth in there. And when you look at the key performers for NEC, it's the digital media, right? The Stands of the world, and some of the other stuff that own, like 9Now and so on. So if you look at what's happening today, and we've got, you know, I'm watching the Australian Open, that's on 9. That looks like fairly well attended and watched. You also look at Stan, and I've seen, again, a few shows on Stan recently. They've got extremely very good reviews. So presumably a lot of people are watching some shows on Stan. So they're probably still gaining a lot of new members in that, or subscribers. So overall, I think they should still deliver a very good, at the very least, a very good digital media performance. So I think that should translate over the, say, next 12 months into a higher share price plus the dividend. So I'm liking it.
Can you do me a favor, Dave? Sorry, can you just go back to that? I watch TV a lot. I mean, actually, not a lot, but I've watched the trend from all the channels, 7, 9, and 10. And the battle I see in the background that investors don't get to see for free to air is more of the, all right, we won the Australian Open. We won the cricket. We won this. We won that. And one thing I've noticed over the last year and a bit is Channel 9 losing a lot to Channel 7. Am I reading that right, Pete? Or
I think it was an interesting swap, right? So basically, 9 lost cricket, went to Channel 7, and then
they got the
9 won
tennis.
the tennis, exactly.
Yeah,
so
sort of like a
swapsies. To be honest, I don't know what's gonna win or not. Maybe it's just a different stable. Maybe it will work for them.
Listen, I think the tennis. If Emma Raducanu keeps winning, I think the tennis will win because I think she's got a huge following.
Look, at the end of the day, I don't know.
Look, I'm going to say it. I'm going to say it because if we don't say it, we're not known for it. Whoever wins the tennis, it's an empty win without Djokovic there. You can't play and win without playing the number one.
Is he what country originally? I know you're Aussie through and through.
I'm Macedonian, so
I didn't know Macedonia existed anymore. I thought that was like Poland. You got conquered.
Oh, God, you love to stir up stuff, don't you, Dave?
We're country neutral. We don't get involved in anything. We just go, okay, if that's what you want.
I don't even know where's Macedonia. I thought it was. I thought it was a country
landlocked. So Greece on one side, Serbia on the other side, Bulgaria on another side, and Hungary on this side.
I thought it was a country that existed in Roman times.
It did. It was, again, there's a big argument between the Greeks and the Massos, which I don't get involved with, which is Alexander the Great and so forth. But
he was British, apparently.
Nah, he was Asian.
No, he was British. His great uncle was from Wolverhampton.
Cool. Played soccer too, didn't he?
Yeah, he played for the Wolves back in 1322. I
agree.
Last one off the list is Coles Wolf, which gives a nice little dividend of 5.29% gross. So you think with the panic that there's nothing on as an opportunity?
Time to buy. With the panic, it's time to buy for the dividend, for the long-term dividends.
Well, you talk about the panic. It's not the panic. Again, behind the scenes, have you seen, was it Woolworths or was it Coles getting done for underpaying their staff by how many millions?
All right. So but it's a little bit of panic. They've got nothing on the shelves.
It's starting to get better now. I went back to Woolies yesterday, and the shelves starting to be refilled again.
Izzy, you're not worried about this?
Okay, great. My shelves are empty.
Yeah, you're not worried about this because in Macedonia you're used to empty shelves, right? So, but here in Australia, Izzy, that's like a little bit of an issue, a problem.
It apparently switches on a mechanism in someone's head when they see an empty shelf to think, "Oh my goodness, I need to go and fill up my trolley." I don't know why. It's the human psyche apparently.
Okay, well, at least toilet paper.
And easy to answer your question on underpayment. I think every company underpays, especially here in Equities.
Yeah, but they've actually been caught out on it. It was I don't know what happened in court. How many millions of dollars they've been done for over that?
Coles, yeah, pretty soon. Right, just to sum up, Wolf, really interesting. Yeah. Thank you so much. I know you worked really hard on this all yesterday, and we went through a lot of stocks and you settled on these. But this is 10 stories giving an average gross dividend of 7.7%. Now, you combine that with the small caps. There's 20 stocks averaging 7.6% gross. Very relaxing for those, because we know it's going to be volatile. We've said that. We can see already we're getting a bit of volatility coming into February. I think looks like possibly the market's going to go a little bit lower, Wolf, before we find a bottom.
The good thing is that, Dave, there's a few other little companies that we can include if something doesn't perform. So it's not as if it's we're closed in with these 10 companies in here. We'll be watching it, of course, but we want to leave it as long as we possibly can without too much tinkering.
All right. So anyway, we're going to end it up today. Yeah. Today, obviously, he's part of the head of sales and development and looking at improving the website and obviously coming up with ideas like obviously the dividend plays. Have you got any hot offers at the moment?
Well, Dave and Pete, one thing I wanted to say, that's why I've really jumped on here at the end of it, not just to give my insights as I do to clients on a daily basis. I'm quite bewildered, to tell you the truth, Dave, about, we put together the best kind of deals we could possibly put together for clients, where I know you are well known, Dave, for saving people as much money as possible, even if it's on a cup of coffee. I remember that. So when we put all these multi-year deals together to actually save our clients even more money than what they're currently on, doesn't matter if they're on a monthly, a yearly. I look at our database of these thousands of clients that we have, and only a handful have chosen to actually take up the saving of a multi or something like that. And I think, okay, Dave, you have very, very nice clients, Dave. They love you so much that they're willing to pay you more every year, and Pete, more every year for the membership because of that.
So Wolf, if a client wants to do a package, a multi-year, which you're saying is better, so how do they contact you, Izzy?
Simple. They can either contact support. Yesterday, I would have sent everybody a hello email just to introduce myself because it's taking so long to get through to everybody. My details are in that email. You could email me at Izzy, IZZY, at equitystory.com.au, or just call me on the phone number on the bottom of the email and let's have a chat. I'll tell you what you're currently on, and I'll tell you how much we can actually save you.
Brilliant. That'd be fantastic, Izzy. And listen, thank you very much but I really want to get your face on so people can see who you are. I'm a little bit worried, maybe a little bit too good looking to be with me and Wolf, because, it's like we like to...
Oh, come on.
We like to get ugly people on, really, to make us look a little better. I need my hair cut a little bit.
Don't worry, my hair's slowly getting white.
Nothing's going to save you.
Yeah, I like your look. You see that the Fonz look, the old... Anyway, I'd like to thank you very much for coming on, Izzy, and taking that time.
Pleasure to be on.
I know you're really busy. Wolf, absolutely amazing and brilliant as usual. Thank God we have someone who knows something about lithium, though. That's good. But apart from Apart from that, thank you very much, boys, and go off and scatter.
Yeah, absolutely. See you, everyone. Hope to hear from the clients, and call me.
Bye.
Get a good deal.
Bye.
See you guys.
Bye.